Now let us discuss about retail versus institutional investors. So there are two type of investors or traders, you can say, basically investors. So the first one is retail investors and the second one is institutional investors. Retail investors are people like you and me, which have their own money and a small capital, and they'll invest in stocks, bonds, mutual funds or anything. We'll learn everything: what is a mutual fund, what is bond, what is stock, what is option trading, what is a future contract. Everything we'll learn in further module. For now, the retail investor and institutional investor, the basic difference is retail investor is an individual and he has a very small capital, whereas institutional investors are basically companies, they're organizations, and they take money from very wealthy people, that they'll increase their money, they'll get profit from their money, and they'll take a small cut on the profit. So institutional investors have a lot of money, have a huge amount of money, and retail investor has nothing in front of them, like negligible. So institutional, these are, and the second difference is retail investor have like small, which I told you, they have a large amount of money. Investment goal, like a retail investor, everyone individually, they can think differently. They want to trade, they want to double the money the same day in option trading, or maybe they have some personal financial goals such as retirement saving, education expense, or wealth accumulation. Or they can also think like the bank gives only 7% in the FD interest rate, whereas if they put money in a good stock, they do some research, they can make a lot of more money than what the bank gives. Whereas institutional investor, what they do, they like if someone is very wealthy, like I have 100 crore rupees to invest, so I'll not think by myself, maybe I could go wrong, it's such a lot of money, that how to invest, where to invest. So what I'll do, I'll just go to a institutional investor, I'll give my money to them, take my 100 crores, give me, basically they'll deal with me that they'll give me 12% or 15% return. That is not fixed, that is dependable upon the market. If the market goes bad, they can also lose money. It is not a guaranteed return. So they will take the money and they will diversify my portfolio. They will they have the best people in their company, and they will do all the research, all the fundamental analysis, technical analysis, whether we should invest in the company or not, and everything. So basically institutional investor will take all the money and he'll give me like a 15% return, and if he makes a 20% return, the 5% of the 100 crore the institutional company will keep. This is how they work, and this is how they make profit and give out salaries.